Welcome to ProWebcast News, where we bring you daily industry updates. Today is Thursday, September 17th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Sunderland Group, your success, our tradition. For more information, please visit www.sunderlandgroup.com. Now for today's headlines. Housing starts and permits for future building reached a 9-month high in the U.S. during August. The Commerce Department announced today that housing starts rose 1.5% from the previous month, reaching an annual rate of 598,000 units and increasing the chances of a healthier economic recovery. Meanwhile, groundbreaking on single-family homes decreased by 3% to a rate of 479,000, ending 5 consecutive months of improvements. In addition, multifamily starts spiked 25.3% to a rate of 119,000. Overall, housing starts are down nearly 30% year over year, but the market is showing steady improvement this quarter. In economic news, airlines are beginning to see a decrease in business class vacancies, giving hope of recovery in cross-border trade in the travel sector, according to the International Air Transport Association, or IATA. The association said that while indications provide hope for the future, they have yet to provide relief for airlines' bottom lines. During July, the number of first or business class travelers on international markets decreased 14.1% year over year, an improvement from a decline of 21.3% in June. According to the IATA, quote, premium travel on international markets, which is mostly for business, is closely correlated to world trade, which bottomed out in May and started to turn up in June, unquote. Despite the improvements, the IATA this week increased its forecast for total losses in the airline industry to a record $11 billion. In income planning news, the majority of Americans have not altered their saving habits as a result of the recession, although some have decided to save more, according to a survey by the TIAA-CREF Institute. The survey found that of more than 1,000 respondents, 76% said the recent turmoil in the economy and financial markets had not caused them to increase the amount they are saving towards retirement. However, of those who did alter their habits, 61% increased their savings, while 39% saved less. According to Paul Yakubowski, Principal Research Fellow at the Institute, quote, there was no evidence that investors panicked. Investors were not bailing out of the market or, on the upside, trying to time the market, unquote. Meanwhile, 60% said they had spoken with a financial advisor within the past 2 years, and 69% said they always or most of the time act on their advisor's recommendations. Finally, 59% of respondents said they had not adjusted their asset allocations, while of those that did, 83% said they decreased allocation to stocks and stock mutual funds. I'm Paul Wilson, and thanks for watching ProWebcast News. For more in-depth news and features, visit producersweb.com.